Hello, good afternoon. You've tuned into MF Corner on CNBC-TV18. I'm Vinny Motiwalam. Thank you so much, as always, for tuning in. Now, today what we're going to be discussing is actually we're going to be solving all your queries that you all have sent us on mutual fund related, whether it's what to invest in, what mutual funds are looking attractive, or if you all have any other investment doubts in mutual fund. And to solve all those queries today, we have our expert joining in with us. We do have Mr. Suresh Sadagopan, founder of Ladder7 Wealth Planners, joining in with us to solve all those queries. Thank you so much, Suresh, for joining in with us this afternoon on CNBC TV18. It's a pleasure having you on the show. And, given this volatile time, we have a whole host of queries, so I want to cover as much as we can. And I'll get started with the first query for today. We have Suresh Singh, who's writing to us from Ahmedabad. He's saying that he's been a regular in terms of investing, and he's invested in many mutual funds, and especially through SIPs. Now, this is mainly with the goal of retirement, which is still 6 years away. So he has investments in multiple funds, as you can see on the screen as well. Wants to exit from Mirai Asset Large as well as large and mid-cap fund, and there's a Mirai Asset large cap fund as well, which he's invested in, and he wants to exit from this. What is your advice? Which fund should he exit? What is your understanding that comes in as well? He has a whole host of other funds as well, like DSP, Nifty 50, Equal Weight, Motilal Oswal, Nasdaq 100 FOF, Parag Parikh, Flexi Cap, as well as SBI Small Cap. Your view on this, Suresh?
So for anybody who has put together a portfolio, I think it has been a proper calibrated approach towards putting together this portfolio. So if I assume that these portions of the portfolio have been put in place and only is worried about this Mirai Asset large cap and Mirai Asset large and mid cap. So if you're only worried about that, I can suggest probably a balanced advantage fund. Considering that he is 54 years old and his portfolio seems to be largely in terms of equity-oriented funds. And I mean, even across the board, including international and even small cap. So I'm suggesting balanced advantage fund at this point in time. I mean, it's an opportune time for him to exit a couple of them which are not performing as well as it should, and get into balanced advantage. It will have a component of, it's a dynamically managed fund. It will have a component of equity and debt. And how much equity, how much debt will be managed by the fund manager himself. So one more important thing that I would want to talk about as far as the portfolio is concerned is that, see, portfolio is not about the highest return. Portfolio should actually take care of your real requirements as you go ahead in life. So if you're 54 years and you're going to retire in maybe 4 years or 6 years, the portfolio should work for you now, and it should work for you in the future in terms of income needs and other needs. So my suggestion is that, okay, fine, I'm giving some advice at this point in time. It's rather important for you to consult a proper financial advisor and get the rest of the portfolio evaluated. So that's my suggestion, silently.
Okay, that's a suggestion coming in from Suresh. Obviously, balance advantage fund is what Suresh is liking, but other key factors that he's spoken about as well that you should keep in mind before investing as well, in terms of your years of remaining for retirement as well, your risk profile. So that all also needs to be addressed. But as of now, which is not performing well, you can exit those and maybe look at balance advantage, more dynamic in terms of the allocation portfolio that comes in. Suresh, the next query we have is coming in from Rupesh, who's writing to us from Pune. He says that since there are many mutual funds within the same category, such as small, mid, large caps, how can one actually pick the best mutual fund? And I think that's very important because it's so overwhelming when you look at so many options that you have that you want to know which is the best fund to pick up. And returns are almost sometimes the similar ones. So then how do you pick up funds?
Yeah, there are hundreds and thousands of funds in various categories. And to confuse the whole thing, there are thematic funds, there are sectoral funds, there are international funds, and so on, apart from the simple large, small, and mid-cap funds. So a lot of people, take the heuristic of looking at what is the return that they are getting from a particular fund, or how many stars any particular site is giving. But that's not exactly the way to go about it. So, Rupesh, I will say something very simple and easy to execute. you can probably look at a simple index fund which invests across different categories. And if you are going to be a new person investing in the market, especially in mutual funds, I think a simple index fund will be a good choice. You will essentially get what exactly the market is doing in terms of returns. So I would say a good index fund which is investing across categories would be a Nifty 500 kind of a fund. If you put it in Nifty 500, it has a good amount of large caps which gives stability to the portfolio, 75 to 80%. Balance will be predominantly in mid caps and about 5-6% will be in small caps. So it gives you exposure across the board. And since it's a passively managed fund, you don't really have to worry too much. Expense ratios are low. Returns are as per the benchmark, and incidentally, Nifty 500 has been pretty good returns over a period of time. So I would suggest a simple fund like that in your portfolio.
Okay, simple funds, basic fund, index funds is what, Suresh is mentioning. Beginners can always look at that because obviously simple, low expense ratio are some of the benefits that come in on that front as well. And just when you're starting off, it's easier to invest in such kind of funds. Also, you can choose balance advantage fund as well. And that's what is mentioned as well. Next query for today, Suresh, we have is coming in from Naresh. He's writing to us from Mumbai. He says that he wants to invest in international funds and instant redemption funds and wants to know the best ones to invest in. Your view and suggestions coming in for this one.
As far as international funds are concerned, I mean, it has reached a certain threshold mutual funds can invest up to, which is about roughly $7 million. It has reached in 2022, it's almost 3 years back. Ever since we have all been waiting eagerly for the Reserve Bank to up the limit, but it has still not happened. So most of the AMCs have paused the investment and sometimes they open it out. And whenever it is possible, you can invest. So it's not really a window which is available all the time. So if at all it is possible, you can invest. The other thing which you can do, I mean, I'm not suggesting this. I mean, for mature investors, we suggest the LRS route, Reversed Remittance Scheme, that route, where any Indian citizen can invest up to $250,000 abroad. So for that, you have to open a separate account. So my suggestion is that, I mean, let us currently park it away for the moment. So it is not available for most people. As far as the other portion, instant redemption funds are concerned, it's a very good thought that you have given to this particular category. Where, I mean, at any point in time, if you really want liquidity and you have invested in a, let us say, liquid fund, and you want liquidity up to 90%, you can actually cash out from the online portal. So, instant liquidity is there, redemption limit is, like I said, up to 90%. Tata Liquid Fund, Axis Liquid Fund, these are some of the instant redemption funds. It gives you best of both worlds. I mean, you get a reasonable return also. At the same time, you get you have liquidity up to 90%. So you can consider some of these. I mean, these are by no means the only fund. There are many other funds. You can consider this category. I mean, it's a good category.
Okay, interesting views coming in there. Let's move on to the next query. We have Abhilash, who's writing to us from Mumbai. He has invested rupees 3 lakh each in Axis Midcap Fund, Mirai Asset Large and Midcap Fund, and he wants to know whether he should stay invested in these funds or exit now. I mean, I'm not sure when was this investment made as well, long-term or short-term, but your view coming on both these funds.
Yeah, so we don't have too much of context here, Abhilash. So, I mean, we are hamstrung on that front. So, as the Axis Midcap Fund, I mean, if you wanted to participate in Midcap, and Axis had done quite well, even if there was a lag. Now, I think the performance has caught up and the fund is on the mend. So, Axis Midcap is something that you can keep in your portfolio. Whereas at large and mid-cap, there has been a lag on that. And I would suggest, like I suggested slightly earlier in the show, Motilal Oswal Nifty 500 fund. I mean, that's for the large part, like I mentioned before, it's a large and mid-cap. I mean, 90% plus is large and mid-cap component, only with a small dash of small cap. So instead of that, I'm suggesting a simple passive fund which can do wonders in your portfolio.
Okay. That's a view coming in there for you, Abhilash. Let's move on to the next query. Madan Mohan is writing to us from Hyderabad. He says that he wants to invest in mutual funds and under the systematic withdrawal plan. And with an initial lock-in of almost 2-year time period, he needs 1.5 lakh rupees per month. And this is coming in from April 2027. Wants to know how to go about this. How do you plan a systematic withdrawal as well? And they've given the requirement that they need as well is 1.5 lakhs. This is going to be from April 2027. What should they do, Suresh?
So what you need to do is you have to ensure that by April 2027 you have something like 3 crores. And assuming you have 3 crores and you're investing or you're shifting money from somewhere into an appropriate debt fund. So you have 3 crores in an appropriate debt fund. I mean, I would suggest a typical corporate bond fund or banking and PSU debt fund or any other debt fund, appropriate debt fund. Once you have that money, then you can withdraw something like 1,50,000 per month. I mean, I'm assuming a withdrawal rate of something like 6%. So that will give you that 1,50,000 on a kind of a perpetual basis. So it's possible. It's systematic withdrawal. I think you must have already figured. It's an excellent tax adjusted way of actually getting the return. So it is not exactly a way of getting interest alone. You are drawing from the interest and principal, but that does not matter. If the fund is performing above 6%, you can withdraw that 1,50,000 perpetually.
Okay. So keep an eye out on those numbers over there and the investments that you require to make as well for that 1,50,000 you want to withdraw every month. Next query, Lakshmi is writing to us from Chennai. She says that she has been investing around 66,000 rupees for 5 years via SIP and wants to know how her total returns will look like after 5 years. She's given a breakup also of her investments coming in, right? And different funds that she's given, 3 funds that she had been investing in. So one is ICICI Prudential Nifty Bank Fund, where she's investing 16,000 rupees. We have the UTI Nifty 200 Momentum 30 Index Fund regular plan, 20,000 rupees, and ICICI Prudential India Opportunities Fund Growth, 30,000 rupees. So what is the expected return that could look like? And any suggestions, to get better return? Should she shift, or what is the outlook here?
Yeah, I was having that in mind. Talk to her regarding that. So, Lakshmi, I mean, it's very curious that you have invested in sectoral funds, you have invested in thematic funds, you have invested in smart beta funds. I'm supposing that your portfolio may be outside of this as well, because these are something which you tend to do as a satellite, not as a core. So I'm assuming that. But anyway, if it is the core, I would suggest you to look at the core funds like large cap, mid cap, international, those kind of things apart from this. The reason why I'm saying this is that if it is a central fund, it can do extremely well at certain point. It may lack the larger market at certain point. That is the same with the thematic fund. So you have to be very careful when you are actually going for a thematic fund, sectoral fund, these kind of funds. On average, MFs have given more than 12% return over a long period of time. And you've given yourself something like 5 years, which is not bad at all. If you look at the time frame you give for mutual fund, equity mutual funds. So by that token, assuming that the markets do hold up and you are able to get that 12% per annum kind of return compounded for 5 years, you will land up something like at 5.4 crores at the end of these 5 years. It should be possible, but Lakshmi, I would suggest that you really look at your portfolio and have the core components in place. Satellite components are fine. Core components should be maybe 60-70% at least. Satellite components can be 20-30%. That's my suggestion.
Okay. On that note, we're going to step into a very short break. Viewers, don't go anywhere. On the other side, we'll continue our discussion and solve more of your mutual fund queries. Welcome back to MF Corner on CNBC TV18. We still have with us Suresh Sadagopan, who is the founder at Ladder7 Wealth Planners, to solve all your mutual fund queries. Let's keep it going then. This next query we have is coming in from Manikumar Ramalingam, who's writing to us from Chennai. He wants to know how much cash should one hold and what should the investment allocation be in flexi cap, large cap, mid and small cap. What is the best allocation that comes in at such a time period also and otherwise? Because I think emergency fund is also something that you need to keep aside.
Yeah, sure. So how much cash should you hold? I mean, there are two components to it, like you mentioned. One is the liquidity component and one is the emergency fund component. So let me first address the liquidity component. For most of the people who have stable jobs where the income is coming in on a regular basis, we normally suggest up to 3 months of liquidity, which should include all your EMIs. But for those people who are in turbulent industries or people who are entrepreneurs themselves, so depending on their perception, depending on their own estimation, it can be anywhere between 6 months of expenses to almost 2 years of expenses. I'm saying 2 years because, I mean, if somebody is starting up on their own, they may have to keep a much larger amount by the side. So that is one. The second thing is the emergency or the contingency. So sometimes there are googlies which come in life which we have not really anticipated. And sometimes some of the contingencies we can anticipate. Like, for example, if there is a member in the family, elderly person in the family, who may have medical requirement. We don't know when it will come, but it can potentially come at any point. So accordingly, as per our judgment, we can have an appropriate amount of money. It can be 5 lakhs, it can be 10 lakhs. Based on our judgment, we can have a certain amount of contingency also by the side. So these two things are very important. I mean, a lot of people understood the importance of that during COVID time. I think we are in a much better footing at this point in time. Now, coming to the exact allocations in large cap, mid cap, small cap, and so on and so forth. See, there is no exact way of saying that, okay, for such and such person, it should be this much large cap, this much mid cap, and things like that. See, on a very broad basis, we normally say that a person who is young potentially has a much more risk capacity, not risk appetite, risk capacity. Because that person may have a long working life ahead and the risk capacity may be more. So to that extent, we may broadly say, okay, this person can take much more risk as compared to another person who is probably at 50. So there is no particular thing. A lot of things will also depend on when the goals are coming. If a lot of goals are coming in the next maybe 3 to 5 years, a lot of it cannot go into equity at all. So I would only say that, I mean, you should actually consult somebody who can actually advise on your specific position, your financial position, your personal position, and when the goals are coming, and so on and so forth. So very broadly, I would say, I mean, if you want to keep it very simple, again, I go back to my favorite Nifty 500 kind of a fund. Apart from that, go to a financial advisor and review your case and get that done.
True. Okay, this next query is also a very short and sweet query in a form, I'm going to say, because Akshay Kuderkar is writing to us from Mumbai. He's just saying he wants suggestions of top mutual funds to invest in for a period of 5 years. So what would you suggest to Akshay? What is looking the best to you right now?
Yeah, since I don't have too much of information in this case, and he's looking at top funds to invest over 5 years, so I presume Akshay is somebody who's trying to invest maybe for the first time, or he's a comparatively new investor. So in that kind of a person, for that kind of a person, I would suggest a passive fund. I mean, I've been a great advocate of passive funds. I mean, Nifty 500, you get participation in across the market. We call it a all market fund. So this particular thing, Nifty 500. So that is something I would suggest. And in a time like this, where we don't know where everything is going, so I would also suggest a multi-asset fund. Multi-asset fund will have equity, it will have debt, it will have gold. It can also have a direct of real estate in some cases. So one can look at a multi-asset fund. I mean, one of the multi-asset funds which came to my view is ICICI Pru multi-asset fund. There are so many multi-asset funds. I mean, we don't go with one name which I have to mention. So look at all the multi-asset funds and you can zero in on one of those things.
Okay, let's move on to the next query. We have Amit Murkute who's writing to us from Mumbai. He wants to know a good index fund to invest in, given that we're seeing a correction in the market. Index funds, what would you look at? They're normally mirroring what the index is doing. So, any recommendation there?
Yeah, I mean, if you want to play it very, very safe and to stick with the blue chip of the world, then Nifty 50 or Nifty 100 would be what I would be suggesting. But if you are slightly more adventurous and you are willing to wait for the longer term, then Nifty 500, the all market index is what I would typically suggest. Investing in Nifty 500 is not that very risky as compared to Nifty 50, though it has certain component of mid and small caps, maybe 20, 22%, 25%, that's all. So I would recommend Nifty 500, but if a person wants to play slightly more safer, Nifty 50 or Nifty 100.
Okay, that's a view coming in there for the index funds. Let's move on to the next query. Suresh, we have G. Nair Subhash. He has been investing in quant small cap, which now is at a lower NAV. Should he continue or redeem it? I think this concern comes in given that recent time we've seen that correction coming in. And sometimes in the small cap, mid cap, the correction was sharper. So that NAV has gone lower. Your suggestion coming in for this one? He's been holding it for some time, is what he's saying.
So, Subhash, what I presume is if you have invested in a small cap fund, I presume that you understand the risks in that. I mean, it gives very high returns at certain points. And there is also massive volatility which comes in the intervening period. So that's the very nature of small cap fund. So what you have experienced is not really very unique to one small cap. I mean, the entire sector is prone to that. So if you are really looking at small cap as a category, you want to keep it there over a period of time, you want to get good return. In fact, small cap category over a period of time does give good returns. So if you have a 7-10 year kind of a horizon and you want to keep invested in the small cap fund, and one small cap is as good as most of the other funds. So hold on to the investment. If you have money to put in, I mean, again, I don't know how much you have in one small cap. Don't overdo it. But if you have some space to invest more, you can definitely do that. But keep reviewing this from time to time. Any portfolio is not good enough in all points of time. You should ideally review once every 6 months.
Okay. Next query is from Shatish Kumar, and he wants to know, do funds with smaller AUM normally outperform funds with larger AUM? Is that a case, or is that a study that you've seen?
Yeah, I mean, I keep hearing about this from time to time, but truly speaking, there is no empirical evidence to show that. See, the largest funds which are available in the market today, I mean, we have a couple of funds now. Parag Parib is, I think, at 93,000 crores. And we have HDFC Balance Advantage Fund, slightly more, 94,000 crores. They seem very, very large. But I mean, if you look at the entire market, it is some 300 lakh crores and things like that. I mean, it's very, very large, $4 million, that kind of a market cap. So, I mean, compared to that, this is going to pale into insignificance. So, truly speaking, there is no real logic as far as large AUMs not able to perform as well as the smaller one. I would say that how the fund manager is managing that and how the stock pick, they are doing. I think that is going to be more important for how the fund performs.
Okay. Suresh, next query. Sachin Bakhai is writing to us and he wants to know, you've spoken about balance advantage funds. So which balance advantage fund should they be investing in? They want to know the best one.
Yeah, I mean, so it's a very loaded question. Best balance advantage fund. I mean, it changes from quarter to quarter. I mean, in fact, not only balance advantage fund, all the funds, they cycle. I mean, what is there in one quarter, after 4 quarters, you read that it's the second or third quarter. It can happen. Okay. So the point is now, balance advantage fund is a good one. I think probably you have understood that, and that is why you are asking this query. At this point in time, it's a good fund. You don't have to really break your head about where to invest. It's a dynamic asset allocation fund. So you may consider some of the good ones in the firmament, which is one is HDFC Balance Advantage Fund, there is SBI Balance Advantage Fund, HDFC Balance Advantage, and there are many such balance advantage funds which are there. I mean, you may consider one. I mean, couple of the names which I mentioned, or anything apart from that aspect. I mean, do your homework.
Okay, absolutely. It's important to do your homework before you invest anywhere. Though Suresh has managed to answer a lot of your queries as well. But Suresh, thank you so much, for giving us your time and solving all those mutual fund queries. And viewers, thank you so much for sending us your queries. Keep sending them as well. We'll keep taking them as often as we can. But that's all the time we have on this edition of MF Corner on CNBC TV 18. Thank you so much for tuning in. Up next, you have Closing Bell.